So what is the ARMR report? How do we apply it to our portfolio to make money? I mean, that's the key at the end of the day. There's always tons of information out there and a lot of people, are sharing a lot of different strategies. But the question is, how do you take it and make money? How do you take it and create alpha? That's the question, right? And so that's what I try to answer on these conversations that we have together all the time. Of course, don't forget, as I launch in here, this is how I run my own personal capital. So you got to take what I say, do your own due diligence, see if it fits your risk tolerance, your goals, and come up with a strategy that works for you. This is a strategy that works for me. And I share with you those 4 portfolios, which is how I divide my capital: dividend portfolio, index only algo portfolio, index and ETF only algo portfolio, and then a traditional whiteboard individual stock investing portfolio, right? So we created alpha primarily in 3 ways. The number one way is we use the risk monitor to tell us when to commit capital and when to take capital out, when to go risk on, when risk off. So we came into the year risk off. The risk monitor was red back in early December of last year. Okay. And then we were able to shift into the yellow and green scenario at the end of March for this last little run into the end of the quarter. And so we captured that. So it protected capital, the risk monitor, and it helped us capture upside. Okay. Pure and simple. If you look at the index only portfolio, it was cash all quarter, relatively speaking, cash all quarter, and then put money to work on the 16th and 17th and enjoyed profits to the end of the quarter. Okay. There might've been one trade in there. We put some money to work, took some money off, but net profitable quarter, avoided all of the selling, captured upside when we had the opportunity. It's a pure way to understand the risk monitor. The second, way the ARMR report, you could take the information and make money, right, was to understand and build a whiteboard that's focused on commodities. We came into the year sharing with all of you that this is 2022 is the super cycle is beginning for commodities. Okay. And commodities of all kind really carried our portfolio, from energy stocks to precious metal stocks to uranium stocks to all kinds of these commodity ideas. Of course, we didn't know there'd be a ground war in Eastern Europe. So that just made the whole situation worse or better from the standpoint of commodity prices. Okay. But the big picture is not the war in Eastern Europe. The big picture is the Fed's behind the curve. Inflation is running hot. It's getting hotter. The Fed has to raise rates. And this type of a market, which we haven't seen probably since the 1970s, is a market that rewards investors for investing in commodities. And so that's where we are. So the whiteboard is the second way we were able to build alpha in the first quarter. And then, of course, the third way is our intraday trading techniques. So all of you join me on the live trading desk. You know what we've been doing for the last 3 months. We're just looking at this quarter. We do it all the time. But in this quarter, when the risk monitor is red, there's large opportunities for intraday movement, and capturing that movement, we capture alpha. And so we've been doing that on our day trading desk. And we also have been using hedging techniques to protect the portfolio. Okay. So those 3 pieces really were able to, maybe were the 3 main drivers for why ARMR portfolios outperformed and we captured alpha. And that was lots of fun. So now let's get back to work and say, what are we going to do going forward?